All right, today's topic, I want to talk a little bit about how futures are taxed, futures and options are taxed. This is really important. I'm not a finance, or rather, I'm not a tax expert, but you should be aware that there are some differences in the way the world of futures and options trade. They offer some pretty exciting possibilities to make substantial profits, and that's why people get interested in trading futures. And the reason why that is they're probably the most liquid. But if you're not familiar with the tax situation around futures and some options, then a trader should at least familiarize yourself with some of these things. So I want to give you kind of a brief overview on this picture, and please go speak with your CPA, your tax person, but it's a brief introduction, so again, this is not everything. I just want you to just kind of take it and understand the tax treatment for both futures and options. So it's pretty simple. For the futures traders benefit far more than any other trader out there, and really the reason, especially equity traders, is that under Section 1256 of the IRC, which is the Internal Revenue Code, it states that any future contract traded on the U.S. exchange, foreign currency contract, dealer equity options, dealer securities futures contract, or index futures contracts are taxed long-term capital gains rates of 60% and short-term capital gains of 40%. Regardless of how long you've been in the trade. So when was it open, when was it closed, doesn't matter. As the maximum long-term capital gains rate is 15% and the maximum short-term capital gains rate is 35%, the maximum total tax rate for this type of trade then stands at around 23% today. So I don't know about you, but if you're trading the SPY and you're pretty good at it, you should not be trading the SPY. You have to turn in every single trade in a spreadsheet, match up buys and sells. You have to pay more for the margin. You have to pay more for the transaction costs. Why the heck are you trading equities when you can trade futures? And instead of paying 45–50% of your tax rate, you're going to pay at most 23%. So the other thing that Section 1256 says is that the contracts are marked to market at the end of each year. So when you report all your realized and unrealized gains and losses, and they are exempt from wash sale rules that you're probably used to seeing in the stock market. So that's a huge, huge advantage, and I just wanted to throw that out. All right, so keep that in mind. So if a futures trader wishes to carry back any losses under 1256, they are allowed to do so for up to 3 years also. So if you've been trading futures and accumulating losses, you can carry those back for up to 3 years. So keep that in mind also. Major advantage over equities. The losses are carried back to the earliest year first, and any remaining amounts then are carried back 2 years. As usual, the 60/40 rule applies. So if any unabsorbed losses still remain after the carryback, those losses can be carried forward. Now, as far as options are concerned, tax treatment on the options is much more complex than futures, and this is why I say, make sure you're going to sit down with your tax professional. But whether you're writing, which is selling calls, or buying calls and puts, they both offer long or short-term capital gains. As well, they can be subject to wash, sale, and straddle rules. So, options traders who buy and sell their options at gains or losses may be taxed at the short-term basis if the trade lasted less than a year, or on a long-term basis if it lasted longer than a year. If a previously bought option expires unexercised, the buyer of the option will face a short or long-term capital loss depending on the total holding period. So, again, much more complicated on the option side. I just want to throw it out there that you understand that there's a big difference. So if you want to get into the depth of this, there's all kinds of information online for this. But by all means, get an accountant who understands traders and get involved with them. So there's a number of them out there. Again, I've had the same accountant for 17, 18 years. Get somebody that can back you and knows how to deal with these things. Bottom line is futures at the end of the year, you turn in a 1099, not you don't have to match up every buy and sell like you do with equities or options. So I try to stick to futures as much and as often as I can. It's much easier, and it's really the best way I found to be paying less taxes. Straightforward, the law allows it. Why wouldn't you trade more? Another major advantage of this is the liquidity. Overnight, you can get in and out of most of the futures products, if not close to 24 hours, very close to that. So I think those benefits outweigh any reason to trade ETFs, especially when the futures markets are much more liquid. So keep that in mind. Have a great day, and we'll talk soon. You're watching the 5 Minute Trader, and if you have any questions, just drop us an email, please.